Good morning. All right, CPI. You guys excited? All right, I guess we should get going. Hope you enjoyed the royalty-free 80s synthesizer music. Yeah. All right. Hey, happy CPI day. Welcome to Forex.Today, the YouTube community of more than 20,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades because trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. My name is Wayne. I will be your guide today on our journey. We have CPI coming out. I have a poll there. Whether you please let me know what you think is going to happen today. Higher than expected, lower than expected, as expected. What's on your mind? Meanwhile, we can trade the volatility or avoid the volatility, I'm hoping to see whether we get risk on or risk off so that I have direction over the next week or 2 or 10. Cool. So please like, please subscribe, please leave comments, all so that YouTube knows that this is quality content and it shares it with others. Yes, I do run ads on this stream only because I'm trying to allow Google to make money. I want YouTube to make money. And maybe that makes them promote the video to others more, so I'm not doing it for me. But I am trying to reach those that need help. Cool. Right on. If you look at the description below the video, you will see that there are additional resources for you. One, you need a broker. I recommend tradersway.com. I believe them to be ethical and trustworthy. I point you towards them to do your own diligence, but they have earned my loyalty and respect. For about 8.5 years, I think. You should give them a try. Also, I want to point you toward tradeplans.ai. What you do is you fill out this little form. You want to trade the stock market today. You're thinking about buying the S&P 500. You put in your entry, 44, maybe. Your target is, let's say, 45.55, and you put your stop at, 43.33. And then you put a screenshot of your trade plan, and you hit submit. Honestly, that takes seconds, right? When you hit submit, you instantly get an email with feedback about your trade plan. Short term, medium term, and long term. And it's incredible. Not only is it incredible, it's free. Okay? Tradeplans.ai. Yeah, it's free. There literally is no monetization at all. I haven't built in advertising. I have not built in email marketing tools, or there's no banners. I don't sell your information to anybody. There's no monetization at all. You should use it. I've spent a lot of money, actually. I've spent a lot of money building this AI, and I think you should try it. And by the way, if you do share the same vision for this, if you use it a few times and go, oh my God, this is amazing. There are some upgrades that we that we can do to the AI, so it thinks more and more. And by the way, I got a bill today from, who was it? Amazon Web Services, I guess. Because Aiden, the artificial intelligence that we've developed for this, actually thinks, and it costs me money. So I'm literally spending money as it's being used. So anyways, if you like this and you want to support my vision, I'm trying to get at least 10 grand of my investment back. Will you chip in? Okay, will you chip in? And this is through PayPal. Pretty easy. Okay, cool. You should try it though. Honestly, it's awesome. Yeah, that's right, Greg. Well, you know, for those that have watched the or attended Quant-in-a-Box live, we talk about the market actually being coiled up like that, Greg, in particular today. It's very, very clearly bottlenecked while we wait for CPI to come out. Yeah, for sure. And this week and next week, I would say, are two of the most important trading weeks of the entire year. So I'm coiled up too, Gregors. Let's take a look at what you think in the poll. Thank you for participating. Now, most people believe higher than expected. Now, here's the thing. There's actually two numbers, so you might have said, well, geez, I don't know which one you're talking about, Wayne. All right, well, the headline number is going to come out higher than expected. Okay, that's the one that includes energy. And we all know energy prices are dramatically higher. Okay, what we want to look at is core, because remember, what we care about is not inflation. What we care about is what the Fed is going to do in the future monetary policy decisions. And the Fed doesn't give two hoots about headline inflation. In fact, they don't even use CPI, they use PCE. But that put aside, the Fed can't do anything about the supply and demand of oil, or wheat, or barley, or gold, or diamonds, they don't directly control the price of commodities. So they get rid of that information and they focus on core. Now, usually what's described is the Fed looks at core because food and energy is too volatile. That's not correct. That's how it's described in the textbooks. That's not correct. It's because they don't control those assets. So anyway, so what we want to look at and what the Fed is going to look at today is core, and core will be lower. If core is not lower, oh my God, if core goes up, it's going to get ugly. Because we're going to have to price in more rate hikes. More than that's even priced in. And we have one more priced in. But 2 more, 3 more, 5 more? Oh my God. So, but I think it'll be lower. And so you'll get a higher headline, a lower core, and then we'll deal with all of that. In particular, in anticipation of what will happen 1 week from now, which is the FOMC meeting. So I covered that in today's Quant-Box Live in great detail. And so you can watch that vid at quantbox.co. I guess, can I do it this way? I guess it's this way, right? At Quant-Box. Does that link you anywhere? No. Anyways, you can check that out. OFO show. So anyways, the market is frozen, but you want to see where you are. We are double bottoming here, wowzer, on a 786 going into the third week of August, which is next week. September, third week of September. And so very, very interesting. Clearly a bottom has formed. A beautiful bottom. We used to call this a J-Lo. But now the kids are like, who's J-Lo? And they don't even get the joke. The joke would be that it's a big wide bottom, but nobody gets it anymore. Yeah, no, it's an old joke. No, a J-Lo. We used to call them J-Los all the time. A big wide bottom. But the kids don't get it. The kids don't get it anymore. So anyways, yeah. So Aussie up and down. Okay, DAX up and down. S&P 500 up and down. And this was one of the scenarios that we had discussed, I don't know, months ago, that sometimes in the third week of August, you get a straight up rocket ship. And I said, that doesn't always happen, but it happens. And I said, I don't actually expect that. What I expect is a big up in the third week of August, and then fully expect a full retracement all the way back to the original entry, and to be taken out and have my heart broken, and then boom, the market takes off and leaves me. Right? So it's not abnormal at all. Yeah, Jim's like $8 on $100,000. Yeah. But, hoorah! And taking a look at the FTSE. Let me back out a little bit. This is on hourly. Let's go to 4 hour. Okay, third week of August, a little pullback, and it's doing better actually. A little more bullish than many of these markets. Kind of interesting, huh? There's our ASX. And remember, I'm trying to see, like, it had been going down. I'm trying to see if it's going to then now start working its way up. So up, 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 and following this new trend line. Okay. Be careful, Heather. Don't be rude. All right. Let us do a quick look at the commodities. Nat gas on the move. I don't really care about that. I mean, that's actually a bit distracting. I'll get rid of that. All right. Brent's still going pretty high. S&P 500 still climbing. This gold is, whoa, whoa, gold. So gold's really going to move today, I believe. Okay, it's going to be impacted by this CPI number. Notice how much it's even broken down beyond this little move. If I can even find where that measured. Oh, there we go. We need to update it now. And, ooh, well, I didn't need to do that. Well, I guess I have to, what's it doing? Now I got to do that. And it's changed dramatically, so it's definitely bearish. So we're caught on the 618 now. It pulled it back into the 50%. Okay. And then we're here. Okay, so once again waiting, but today was the thing that we were waiting for. La la la. September 13th, that's today, baby. So this is going to turn up, isn't it? Yeah. Oh, cash, let me show you. You go to here, your market watch. You just grab one like Aussie CAD and you do specification and it shows you long swap and short swap. That's how you do it before. Do 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 ba, 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 ba. Oh, I don't want to lose that CPI. I'm going to keep this nearby. I'll keep it over there. Just want to, I guess on WTI, I should show you just like how crazy high it's gone. We were caught on that M4, 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 R2, R2. Wow. Wow, that's a big month. That's a big month. I kept trying to grab it in this. I had it at 79.80 and then I had 80.5, and I think I tried again at 81. Just haven't been able to stay on the bull. Okay, so dollar's going to get volatile today. There's no doubt about it. Okay, and so we'll see once again, like for what, the third time we get to this level and euro dollar collapses. So I've been long since Friday of last week. So now it's Wednesday, right? Friday morning, then Sunday, then Monday, then Tuesday. Now it's Wednesday and still no higher high. I mean, I suppose a bit higher high. And, you know, waiting for the news. So I don't know what to do with this. Wait. Of course, I want up, as you know. So maybe it works this time. Maybe it's this line down here. Maybe the pivot holds. Maybe. Well, obviously, it depends on a lot of what the news is going to be, right? So just kind of got to wait. Same thing with gold. Just kind of have to wait. Pound dollar, you can see, is on a key level of support. Okay. M1 with a weekly cluster. M1 with a weekly cluster. M1. Okay, this is an M1 as well. But with a weekly buy zone. We're still in the weekly buy zone. If you're a bull, okay, this is the buying price. Now remember, this trend isn't bullish, but it is counter-trendish. So at some point, maybe today, you get a move like this where maybe you get a higher high and then you stretch this out for a higher low, okay? And then maybe by the end of the week, maybe we're higher than this high. Okay, and we have a new trend. So right now, that's just a hope. The hope's not a strategy. It's a hypothesis. So there's a hypothesis. If this makes a higher high, then will you go long? And of course, this will have everything to do with the dollar and a lot less to do with the pound. Okay. Boo, 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 boo. Yeah, Heather, well, pound yen is one of the most volatile currency pairs that there is. So that's going to be obviously the most expensive. Always has been, always will be. When I used to start, when I started trading trading the pound yen was something like 14 pips spread. And the swap, I don't even remember how big the swap was, but luckily there's a lot better liquidity. So compared to when I first started, trading Forex is cheap, like 90% cheaper than when I started 20 years ago. Just quickly look at the yens, and then we got to get ready for the news. And yens, some green on the screen, trying to get that risk on going. So I guess what we'll do is what? Watch euro dollar just being the most liquid of them all. So we could do this. I'll switch it over to a volatility setup. And we'll go into a fiver. And let me get my BLS. And let me get a calendar. And I think we're updating. We're going to update soon. If you got the number, go ahead and post it. Wait for it. Is it still 30 seconds to go? Okay, the numbers are coming in. 4.3. Not that's I would call that as expected. I talked about that at Quant-in-a-Box. Okay, so core pretty okay. Core's okay. It's okay. 4.2 would have been great. 4.3 is about right. Okay, all urban CPI. Oh, let me get this over here so we can watch. Interesting. So what is this? The reaction to the headline? I didn't even look at the headline. What is the headline? Yeah, it went up. Yeah. It's so funny. We already knew that, or at least I talked about it an hour and a half ago. It's not a higher number. It's a lower number. Nobody gives a damn about the headline, in my humble opinion. So anyways, yeah, okay, so the headline is 3.7. Yeah, I talked about it 3 hours ago. So anyways, so what the world actually cares about is the core. So I'm going to say it's a good number for now, but, you know, be careful here. What you might want to do is use some pivot points. Maybe I'll put them back, and then we'll go through the numbers. I guess we'll do a confluence on this one. And then we'll bring it back. Okay, so let's take a look. Step back to reality. Oh, there goes gravity. All right. Index for gasoline is the largest contributor. Gasoline prices has nothing to do with the Fed. Okay, accounting for over half of the increase. Okay. Okay, shelter is a problem for the 40th consecutive month. Wow. The energy index rose 5.6%. Of course. Food increased 0.2, so flat. Okay, groceries are flat. Okay, that's okay. I mean, they're up slightly, but not ridiculous. Okay, the index for all items less food and energy rose. Wait. The index for all items less food and energy. Wait, no. We were at 4.7. And now we're at 4.3. So what's it talking about? Yeah, so we're at 4.3, which is, and we used to be at 4.7. So that's the good news. That's the good news I'm talking about. Easy peasy lemon squeezy. All items, yeah, larger increase. Yeah, so yeah, I don't care about this. It's this one I like. This is the one I care about. Yeah, okay. Oh, I see. It rose there and there and there, but still year over year. Okay. Okay. Cool. Food, energy, yeah, got it. So this is the big thing. We got to work on that shelter. So rents are still not coming down. Medical care is up. Used car prices down. Yeah, they continue falling. Yeah. The shelter part increased 7%. Wow. Accounting for 70% of the total increase. Whoa, dude, we got to get real estate down. Okay, insurance across the board is up. Wow. Yeah, but look at that. Motor vehicle insurance, 20% increase. Wow. That's amazing. All right, cool. Let's measure the deviation. Now, it would have been nice if that would measure it properly. Is that the one I grabbed or a different one? No, that's a different one. I'll delete that. Oh yeah, let me go back to the scalping mode. Boom, 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 boom. Cool. Okay. Cool. Was that helpful? The pre-news coverage, was that helpful to understand all of this? Cool. This is good. This is good. This is good. Again, if you want the greater detail, I covered it at Quant-in-a-Box live. I covered in great detail. I said the headline was going to be high, the core is going to be low. What everybody cares is the core. It's all been covered in great detail. I'll give it to you here. It's funny that it has a weird... That's the thumbnail? I wonder if it works. Yeah, it's working. So very cool. So now we got to let that work out. Let's do a quick look around the world. Let's see. Let's do some commodities. Hang on a second. I got something over here. Let me do something first. Hang on. Interesting. All right, hang on. All right. Kashomnia says, has there been any discussion here or at Quant-in-a-Box about the increased tension between the United States and China? Is that not a part of the reason oil is continuing to rise? No. Also, that's quantitative. That's not quantitative. You're talking about geopolitical. No. Yeah. And the reason oil is up is the United States refuses to produce. One of the things I covered yesterday in the swing trading group meeting, because we meet Tuesdays and Thursdays, I showed empirically that the United States actually has less oil rigs this year than last year. Does the new IEA report matter? Of course it does. Luis says, what? CPI neutral for the Fed? Neutral. I don't know what you mean by neutral. Okay. And sticky inflation for the rest of the people. You mean like a neutral policy? Maybe. Why don't we take a look and see how things have changed because of this news and throughout the day. So we need to do the Fed Watch tool. Let's go to the CME group. Oh, wow, yeah, look at that. Look at the price change. Okay. So let's go to this. Let's go back. Let me do this one in case. I'm assuming you know all this stuff already, but more people have said the Fed is pausing. This used to be 10% yesterday. Now it's 7%. So more people think, because of the news that just came out, the Fed's going to pause in September. Okay? Let me point out what you want to look at is 5.25. Okay? Then you go here, and right now it's 50-50 whether they raise in November. All right. But again, if you watch the Quant-in-a-Box video, I don't think anybody actually cares about this. What they care about is that. And you're going to have to pay attention to, right now, there's a 93% chance of rate cuts next year. And you want to watch and see if that changes. Right now, only 6%. 5.7% chance that the Fed is on pause all of next year. Well, you want to see if that changes throughout today. Okay, and next week, and after the FOMC meeting. All right, so now we've got our big range. We got our big vol range. So, yep. Look at the vol. It's NASDAQ. And so we got to work our way out. The market's confused, of course, because the headline number was up, the core was down, and most people don't know how to trade this. So they're going to jump all over the place. Okay. Sky Killer says, this was actually a good CPI. It was a really good CPI. Yeah. "70% of the headline inflation is gasoline." Well, there you go. Yeah. So again, watch the video and you'll see the one at Quant-in-a-Box. Okay. See how the yen reacted. Just sort of, still just sort of climbing, very slow. I want to, this stupid thing. I'm kind of looking at it this way. So we'll see if it can move up and stay above that line now. Yeah, well, the stock market open and the follow through. The stock market open, the stock market close today will be important. In particular, like you said, to finally deploy some capital. So for those that said, well, they want to deploy capital in September, but they're worried about the Fed meeting. They want to know what the Fed's going to do before they deploy capital. Now they can say, well, core CPI is coming down. The Fed's going to pause. And only a 50% chance of a hike in November. So they're going to deploy risk on. They'll give it a shot. Remember, almost nobody makes money on the way down. And almost everybody makes money on the way up. So there's going to be a propensity for the market to want to move up. Here's the euro yen. Obviously, we got the support. And now we're on day 3 of bull. Can we get above this level, which is our continuation level? We've been here a long time, like days, weeks even. So that's our continuation level. A breakout above that gets us to the next level, which is, I have it here. That's the conservative one. I can expand it a little bit and grab that wick. And then you can see there's one slightly above it. Okay? So we'll see how, we're right on the resistance. So the market is not like random. Everybody that can see sees it. Okay, and so we'll see if there's going to be follow through on this time frame. I mean, that's a 5-minute. I'm just showing you how sensitive and how obvious that price level is. Okay, that even on a 5-minute chart, it's being respected. And it goes back to like late last week. Sky Killer says, well, no, they will likely raise interest rates, Sky Killer, by the end of the year. And they are allowing yields to rise. We've known this for 8 or 9 weeks now, that they're allowing it to float to 1%. And it's gone from 0.05 to 0.75. I mean, we're halfway there. And that's going to create a little bit of yen strength. Now, there's seasonality behind what we're doing. So, again, I have to point out, in January, I said expect the yens to start going up no later than the 3rd week of September. And regardless of Ueda's comments, I'm going to think about that as my basis for my setups. My ability to predict the future 38 weeks in advance. . And then I say, how would that be impacted by Ueda's comments, not the other way around? Okay? Well, so for example, Skykiller, this will go up until July of next year. But most people will feel, relieved to make 35 pips. And they're like, look at me, I made a 35 pip trade. You're like, yeah, but it's going to move 2,000 pips, but whatever. Okay. So we'll learn more about the ECB tomorrow, but the problem is they give no guidance. None. Zip, zilt. Which maybe that means they don't know. They don't know what to do. So how could they tell you any different, huh? Anyways, let me get rid of this. It's not helpful anymore. I mean, actually, I can use this to indicate the higher high. I guess that'll be interesting, okay? You see how this high is higher than the last high. Yeah. So anyways, next top, but you can see I already have it marked out, but okay. Burns says, rumor, a massive fund is buying Japanese yen. They expect the Japanese to break trend and hit positive interest rates in the next. Okay. That's fine, Bernd. Sure. If they adjust the policy, then I will adjust too. But I won't guess and I won't bet. The problem with a lot of hedge funds is they're based on betting. There are plenty of, heroes out there, and I don't consider them heroes, but these guys that make $1 billion in a day, they're like, oh my God, they're geniuses. No, they're degenerate gamblers. And they gamble fools' money. And very often they make $1 billion in one day, and then next year they lose $5 billion. But it doesn't matter because they still live in a mansion and they still go to work in a chauffeur-driven Bentley. Yeah. Cool. That's working out tickety-boo. We'll look at the CAD plan. Okay. CAD's making its way up as planned. Great. Take a look at the Aussie plan, like it's trying to break above as planned. Kiwi, it's Oscar Mike. Support, 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 support. Very nice. Looking at the beast now, there's that high vol trade. Okay, let's go up back a bit. I have this going all the way to 190. Yeah. So we'll see. 600 more pips to go. Huh? It's all been planned out, days, a week and a half ago. It's all been planned out, everybody. It's all been planned out. Okay. Taking a look at Aussie. Oh, look, we had that giant crash, and then boom, off we go. On our way up to 65 and beyond. Very nice. Good job. Good job. Euro dollar, taking a look at that. Okay. higher than that candle, but not higher than that candle. So we still got work to do. And there's a long day to go. And it's a long day. Okay. This is something I covered yesterday. Okay. And right now we're riding the 4-hour 21 to the down. That's exactly as planned. Kiwi dollar, this shows the break. Once again, US dollar weakness, even against the pathetic Kiwi. Now, I have this drawn as the bottom. The bottom. Yeah, the bottom. Not just slowing down. Maybe it starts moving up. Oh my God. Well, that'd be different. Well, yeah. Okay. Pig, bottom, 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 pop. Okay. Once again, I covered that in Quant-in-a-Box today. So far, everything is right as rain. Let's go to the commodities. And we'll look at the S&P 500. This is nice. Uppity up, up, up. Haven't broken through resistance yet, but would love to get up past this level up to that level today, which is 44 3/4. That'd be interesting. Maybe even higher. Could we go to 45 today? I think if all goes as planned, this will continue till the end of the week. So again, I wouldn't be in it for a scalp. I'd be in it for a swing. Looking at gold. Got to zoom in here. Okay. Gold is back up. I wouldn't get too excited about it, but on the small time frames, it's trying to improve. Okay. It's going to take a while to turn this back around. Maybe it will, maybe it won't. But the new floor here is at about 1908. Okay. So we haven't made a higher high yet. That's the issue. Okay. And there's one here, but I already have one marked over here. So I might as well just use that one. And I'll kill that. And I'll kill this. And I'll even kill this. Cool. So you got to pay attention on smaller time frames. And I should be able to survive this. Cool. So it'll take a while. I mean, it's making lower lows and not higher highs. So that may take a while. So that's working. That's working. The dollar pairs are working. I'm tickled pink. Take a look at exotics. Okay. I planned this one out for you. Boom, boom, boom. Wasn't it yesterday I spent an hour on this live stream setting up this trade on a 5-minute chart? Right? You guys remember yesterday I spent an hour setting up a 5-minute scalp for you. An hour, maybe an hour and a half. On a 5-minute chart with the short between the 21.55 hourly. And it did a 382 and gone. So it looked like this. There it is. Yeah, boy. And then notice the role reversal. And there you go. So who knows if it'll last? Probably, but you don't know. Volatility is volatility, and volatility is bad. Cool. Nice, right? Everybody happy? Good. 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 Great. Fine. Good. Okay, dollar week, yen week. I'm happy with all of that. Lovely. Yeah. Yes, you're ugly, with your smile so worn and your teeth so green. And it was great to see like Swissy changing direction here, because it's basically on our schedule to happen, and it's just hasn't not happened. I think it's pretty cool. At least you can measure it like that, at least less up, but then someone might measure it that way. So interesting, huh? Maybe a break to the downside. Is that an old man easing into a hot bath? Mm-hmm. Cool. Very neat. Very neat. Very neat. Very neat. Okay, stock market's waiting for the open now. We've had our vol. DAX held. Hong Kong held. Australia held. Japan held. FTSE held. Everybody's good. It's giant across the board, not risk off. Okay? Let me get rid of some of this because some of you guys freak out. You're like, you have so many lines in your chart, Wayne. Okay. Boom, boom, boom. Cool. So, yeah, I believe we got to get above that price here, but bottom, and maybe, so I have this going from S1 to maybe even high as R1. S1, R1. So we'll see. We'll see. See, pivot points are just doing what you're supposed to be doing anyways. That's what I like about pivot points. It's a way to automate your longer term research anyways. So pivot points are looking at bottoms and then projecting tops, and that's the use of the tool, huh? To anticipate tops and bottoms. Very nice. So across the board, not risk off. That makes me happy. When skies are gray, you never know, deal. Okay. So what I will be watching the rest of the morning, in particular during the, let's say, the first hour of trading, is what happens on the daily mixed. The daily bias, does it go from mixed to risk on? We'll see. So QB, Quant-in-a-Box, is going to have to measure a bunch of things. Let me let it load. Okay. It's going to have to measure the change in the VIX, the change in the S&P 500, the change in the yen futures, the change in gold, the change in the dollar index, and the change in the yield on the 10-year T-note. That's a lot. Well, when you look at all of that as an aggregate, it's a basket. And if they all do a certain thing, it becomes risk on. If they all do the opposite of that certain thing, then it becomes risk off. So I'm going to wait for the market open, and what I'm praying, remember, praying never hurts. I will be praying for up. Risk on, baby, risk on. Yeah. Between now and next week, I'd love some risk on. Yeah. And then I'd love the Fed to pause. Yeah. And then we get an SEP that what? I'm not sure what to expect from the SEP because I don't know. They told us they were going to cut. Are they going to cut? I mean, I don't know. So there's our next risk on the dot plot. So once again, watch the video at Quant-in-a-Box. I cover it in great detail and furious anger. Let me pull that up. I cover it, so I don't need to do it twice. It's already in the open market. Here you go, 49 minutes ago. Okay. So anyways, go ahead and watch it. And, well, I got to get to work. Got to get to work. Got to go, baby. Got to go. Market's going to open. Thank you for being part of the community. Thank you for clicking like, thumbs up. Thanks for leaving comments like, dude, Wayne, you broke down the headline and the core using data before it even happened. And then when the headline came out and freaked everybody out, you were cool and calm and collected. And sure enough, the logical, the prepared, the institutional investor got exactly what they wanted. And if you chase that red candle after the headline was greater than expected, you got run over by a freight train, and it's your own damn fault. Peace on earth. May the pips be with you. May your profits be above average. Cheers.